This is all his name. Yeah.
If we can remember to keep everyone on mute until we're speaking, yeah? Great. Okay, good morning, everybody. I'd like to welcome you all to the Daily Energy Markets podcast. I'm delighted to be joined on September the 10th this morning by Mehmet Ogochu, Group CEO of Global Resources Partnership and Chairman of the London Energy Club, Dr. Charles Alina, CEO of Cyprus Natural Hydrocarbons Company, and Senior Fellow of Global Energy Centre at the Atlantic Council, and Scott Livermore, Chief Economist of Oxford Economics in Middle East. So thanks, gentlemen, for joining us this morning. Lots to talk about. I'd like to sort of address one question and perhaps get all of your points of view on that first, which is what we've seen, generally speaking, in the last month, but even more so in the last week, oil prices failing to kind of hold themselves up despite the fact that there are several bullish factors which should be supporting the oil price, not least of which is the most recent one, which is OPEC postponing adding volumes to the market. Mehmet, let me start with you and get your point of view of why you think we're not seeing what should be bullish factors, and I could list them, but maybe you can talk about them, and yet the oil price is not responding.
Yes, I mean, there are so many factors that could actually push the prices up. Geopolitical risks still on the table and still going on. But as we know, the market has already bought the geopolitical risk, whatever happens, unless the Strait of Hormuz will be totally blockaded and there is no oil flowing, out of Red Sea. And there are so many other factors. But Russia-Ukraine war is still there, and the Houthis are still attacking oil tankers. And so geopolitical risk normally should push the prices up, but it's not happening. And then OPEC Plus decision not to extend the production cuts, so there will be more oil coming to the market this year and next year. And the demand is not going up. So these are the basic economics fundamentals. Therefore, the prices, it seems, will stay in the band of $60 to $90. Before we were talking about, 80 to 100, but now 60 to 80 we are talking about this year and the next year. And in my opinion, I think the markets will stay where it is. It's not going to change much. And the US elections, of course, is an important factor because Biden desperately wants the prices to come down, so that this is going to be a positive factor in his re-election, hopefully, of course, for Kamala. So all factors are aligned to tell us that the prices will not go up significantly. But beyond 2025-26, because of the crunch in oil supply, because of the lack of investment, I think we will see the prices going up. But the next 2 years will be probably stable as we speculate right now. But beyond that, I think we are going to have a serious problems in terms of demand going up, but supply more or less subsiding.
Okay, thanks, Mehmet, for that. Scott, let me go to you. What does that mean for specifically GCC oil producers and not, Saudi Arabia, for example, who's been leading the OPEC plus policy market management, which a lot of people have complimented as been done quite well given all the challenges. If we're looking at a new oil price average, and it's amazing how the market again is now saying we're adjusting to a new range, whereas only 2-3 months ago it was some banks were calling it over 100 again.
Yeah.
Is it the reality of fundamental economy realities around the world that's settling in, China, US, or did we have it all wrong in terms of predicting the demand even for this year, let alone next year?
Yeah, so I think there's quite a lot in there. So I think the current weakness is very much a demand side driven story. If you look over the past week, S&P 500's had its worst week in 18 months. There's increased concerns about the US following the payroll data. You look at some of the big banks revising down their China forecast for this year and next. So the big demanders are weaker. Now, we think that demand story is probably overdone. Why we don't think there's going to be fireworks in the global economy. We don't think we stand at the edge of recession. So therefore, if the markets come back and reassess, that is a reason for a floor to maybe go under the oil prices. It's not going to push it back to $100 that we were talking about potentially a few months ago, but maybe abates the decline. What does it mean for the GCC? I think there's probably a short-term story and a longer-term question. The days of where government spending and government policy moves in lockstep with oil price are long gone. There's much better fiscal planning. There's much better medium-term fiscal frameworks. And the finances of the countries in the region are in good shape, even if oil does remain in a short term below fiscal break even, so the amount that keeps the budget balance in check. So the governments can stay the course and pursue their growth and diversification policies. If it looks like oil is going to be weaker, then adjustments may need to be made over the 2, 3, 5 year spending horizon.
Okay, thanks very much, Scott. Dr. Charles, welcome again. I mean, to get, again, your point of view on maybe the demand and supply picture, because, of course, the demand has come out perhaps a bit weaker than expected as the year has gone on. Supply picture obviously has been managed by the main producers, but we had, of course, last year, this US production that was ending the year very strong, non-OPEC supply. How much do you think the market is paying attention to non-OPEC supply still as a concern for how to keep prices, I suppose, supported?
Well, that's exactly what is driving the prices down. As you said, the economies of China and the United States are still very weak. The United States, we're not going to see an upturn until we hear more about the Fed rate and the result of the elections. China continues to be weak, and demand isn't going up as much as expected. Well, at the same time, non-OPEC oil supply is going up and up. I mean, it's as you pointed out, the United States this year is achieving the highest ever oil production, and it's still going up. It's not going down, especially with the majors getting more and more involved. Production is going up. And at the same time, other countries like Brazil, Guyana, Canada are expected to add something like 1.5 million barrels of oil extra this year to the supply. These factors are huge. And they appear to be to dominate the scene. So the geopolitical risk is there, but it is not as strong as these two factors: the weak economy in the US and China, and the huge increase in production by non-OPEC countries.
Okay, thanks, Dr. Charles. Mehmet, just back to that. Let's again back to you about OPEC again, because the other aspect of what they're doing, obviously, they've postponed their adding back some of the voluntary cut volumes, and thank God they did, because if they hadn't, what would we be seeing now on the price? But also, a lot of the market commentators are saying that when they do indeed add any volumes back, and if they do, that the compliance picture also would have improved, because we've of course had Iraq overproducing, and also that ties into the whole new capacity that the UAE was hoping to add in a new quota. How are those dynamics now, do you think, playing out within the group, or will they just have to wait till the new year to talk about them?
Well, as you know, OPEC is the second largest producer within OPEC after Saudi Arabia. And what's happening in the northern part of Iraq is very important. We have to watch it because, as you know, the dispute between Baghdad and Erbil has not been resolved yet. And Erbil is now stepping up production to the level of almost now 300,000 barrels per day from very low levels. And how it's exporting it is another question, of course. There are reports that Syria, Iran are getting some smuggling of oil, but also Turkey is the main destination, not through the pipeline, but through the trucking, I guess, because pipeline is still closed. And then in Libya, Haftar, as you know, has blockaded oil production in the eastern part of the country because of a dispute regarding the central bank. And then we know what's happening in Russia. Venezuela, I think sanctions are toughening there. Even we saw that the US was confiscating the aircraft of the president, Venezuelan president. And I was talking to someone in Washington yesterday, and they said the screw will be tightened further on Venezuela. So these are the indications that the prices, the volumes will be decreased actually. Not voluntarily, but because of this political disputes still going on some of the major nations.
Okay, thanks, Mehmet. I mean, Dr. Charles, just to go to you on that point, in terms of, you know, what's happening within the OPEC plus group dynamics, of course, Russia is one of those members, and it has, you know, has its own dynamic. Saudi Arabia has allowed it to produce whatever it is doing. Do we still feel towards the end of this year that the group, do you think, is as intact as it has been, let's say, the last 2-3 years, including allowances for what Iraq is doing, including for obviously what Russia's been getting away with, which we're not sure what that is, but clearly Saudis wanted to keep them in the group. Do you think, given market conditions, that the group can hold itself together going forward in 25 on the same policy?
Well, I think undoubtedly they will. I mean, they have seen OPEC Plus has seen worse situations than now. It's not new to them. They have a longer term horizon. They have been very effective. If you look over the years, not just what is happening in a few months, if you look over the years, they have been very effective in regulating the market, and they will continue being so. ExxonMobil's energy report released recently is pointing out something remarkable. They're saying that oil consumption depletes oil reserves by 15% per year, not the 4 to 8% that the IEA has been assuming. They base that number on the increasing production from unconventional oil. And they're saying that within a year, oil production will go down significantly unless it's replaced. All of these things strengthen OPEC's hand, because that's where most of the production can easily be increased. So I don't see OPEC having problems or falling apart or anything like that. I think that if anything, it will ride the current problems, and we're going to see perhaps increased production next year.
Okay. Scott, let's talk a bit about commodities in general and the oil price, because again, you know, we've seen the oil price weaken the last few weeks, but everything and certain commodities as well. But, you know, we've got a lot of positive signals. Like you said, it doesn't look too bad. US, China isn't as bad as some people are purporting. You know, we've had stock markets still perform very well. We've got gold obviously up there. From the inflation angle side, you know, that's, some people would say, yes, inflation's come down, and so the Fed's going to now relax a little bit, while other people on the ground are saying, you know, in the shops and in energy prices, you know, even we're not seeing that sort of, as if you like, percolate down. So is the inflation story resolved or not? And is that why oil is also taking a hit, because it's usually a hedge against that?
So I think the inflation outlook is relatively benign. It's likely to be volatile, so we're going to see bumps in the road related to oil and other commodity prices. But inflation is coming into a territory which is closer to central bank targets. I think if you look at some of the minutes that are coming out, there's not 100% agreement amongst the governing councils. So some people are more hawkish than others, whether it's the Fed, whether it's messages coming out from the ECB, minutes from the Bank of England. And that may kind of temper the decline in interest rates. So it may not be that you're getting cuts every meeting, it's cuts every other meeting. But the overall inflation picture is relatively positive, and we expect it to remain in check. And that's important for the outlook, because wages tend to be, at the moment, relatively robust, help the consumption and help households' income, which is one of the factors why I said at the outset that the recession fears may be overdone, and the economy may not pop, but cautious optimism should be kind of the perception.
Dr. Charles, I mean, what about Europe in terms of recession fears? I mean, Germany's had a bad year. You know, we get positive reviews on the UK economy, surprisingly, with all the challenges it's had as the Brexit, I suppose, filter continues to hit certain realities there. What's the mood in Europe these days? And let's give us a point of view also from the gas. I'd like to switch a bit to gas and talk about that in terms of, very nice gas prices in the last year, no problems, no spikes. What's the forward-looking sentiment, if you like, for Europe into Q4 from an energy price cost inflation point of view?
Well, everything is happening in Europe right now. The news today is Draghi's new report that is recommending spend 100 billion euros to rekindle the European economy, which, as you pointed out, is suffering at the moment. Germany is in great trouble. France is in great trouble economically. German industrial output has declined by 15% over the last 3 years and still declining quite rapidly. They don't seem to be able to arrest it. Volkswagen is closing factories in Germany, but I don't see the economy going into recession. I think once the European Commission sorts itself out, because over the next week or two, it will be the hearings for the new commissioners before they get a new commission in place and they start firing on all cylinders. And the European Commission is going to concentrate mostly on the economy and trade and defense over the next 5 years. Green issues will take a lower priority. And altogether, I see Europe gradually recovering, but we need to see first what happens in Germany and in France. France is already on the way to sort itself out. Appointing Barnier as the prime minister seems to have been the right way for France. The news are quite. I mean, the news from France is more quiet now. It's not as confused as it was.
Well, there is opposition there. The left isn't very happy.
No, but the left, I'm afraid, is going to have a hard time out of this. They will be sidelined to a certain extent, even though they were a strong party in the elections. But Germany has no answer. I mean, the result of the elections with AfD winning last week, it's not good, and there is no clear way forward for Germany. I mean, this coalition, whether it survives or not, is not absolutely clear. But then, if we look at the rest of Europe, they're not. The countries are not doing that badly. I'm sitting right now in Brussels, and I was last week in The Hague. The two countries are, despite their own problems, especially here in Belgium, where they still don't have a government. The situation is going forward steadily. There are no major issues, and then you have Italy and you have Spain, and you have the optimism in the UK right now that the new government is bringing into it. So altogether, I think, but gas is suffering. So two reasons. One is the decline in industrial production that is reducing gas consumption considerably, and the continuous increase in renewables. Renewables now, or low carbon energy now, provides more than 50% of Europe's electricity, and it's increasing. Gas utilization over the last 3 years has gone down by almost 30%, and it's still going down.
Okay. Well, I mean, that's true, but, good for Europe because it has alternatives. But the rest of the world is certainly still, demanding gas. And of course, the growth areas of Asia. Mehmet, let me go to you on that. We'll talk a bit about Asian demand, but I want to talk about Turkey, as we have the advantage of having you here today. Also just inked another LNG supply deal last week. As well, obviously, while it still works on its own, I suppose, domestic infrastructure for that. What do you make of that? How much is that lending support, if you like, to the LNG market? And give us a view also maybe on Asia and where that is in terms of future gas demand. I mean, now that we've taken Russia out of the equation also for Europe, it's all about LNG.
Of course, whatever happens in Turkey will have to be put in the global context, because Turkey depends heavily on oil and gas imports, 98% in gas and 95% in oil. And referring to the previous discussion that Charles was talking about, I think what we see right now in Europe, first, weak governance, a terminology we use usually for third world countries. But now in Europe, as we've seen as a result of elections in Germany and France, and there's a sort of weak governance, and Italy without government, Belgium, and therefore this is going to have impact on the economy as well. Plus, competitiveness of German economy, because of the difficulties in gas supply from Russia as a result of Ukraine war, and it's having its toll, seriously. And Germany is losing its competitiveness globally in this regard. And coming back to Turkey, and yes, as you said, Turkey signed another deal with Shell now for starting, I think, operational 2027 for BCM. And before that, Turkey also signed a deal with ExxonMobil, another 10-year deal. And it shows, on the one hand, Turkey is buying huge bulks of natural gas from Russia, Iran, Azerbaijan, and but also on LNG, increasingly, the US control companies are having an upper hand in LNG, which is almost 30% of Turkey's natural gas demand or supply, which is around 60 BCM a year. So this is a significant amount. So this is a political balancing act, if I may say so as well. Then Turkey builds also huge storage, natural gas storage sites, and almost 40% of its demand will be stored. So in terms of gas supply security, Turkey is feeling better now. Pipeline gas, LNG, as well as the storage places, and plus reducing the share of natural gas in the Turkey's energy mix, increasing renewables. So I think this is quite a healthy development in terms of what Turkey is doing. Then there's a prospect that perhaps in the future, gas might be coming from KRG of Iraq as well. And so this has to be factored in. ISAT, there was hopes, especially with Israel, but whatever happened in Gaza, of course, killed this prospect altogether for the foreseeable future.
Okay, and I want to go to Dr. Charles actually about the EastMed as well. But first, let's have a look at our survey, and then I want to go to Scott a little bit. The oil market is adjusted to a new normal price range of $60 to $70 for the fourth quarter. So we are there at the moment, obviously in the high 60s. Are we going to stay there for the next 3 months? Is there anything that could pull us out of there? Of course, that won't be the average for the year, but let's see what everybody thinks about that. Scott, I mean, talking about gas, but not getting too technical, but again, another focus of the Middle East NOCs here increasingly has been not only to boost their trading arms, and we're seeing a lot of change there as well in terms of trading energy, but and of course they have their budgets for the renewables and new clean energy transition, but also gas, acquiring gas assets abroad, boosting their own gas production. Is that, do you think, a realization from those NSCs that oil does have a peak, whether it's now or in 30 years' time? And is that, a trend that you see them continuing to focus on as a transition fuel?
Yes, it may reflect partly that oil's peak, but I think it probably reflects more that what we're seeing across the Gulf is the spurt for growth. Clearly in the Gulf, we talk a lot about diversification, but I think in reality, what we're seeing is the governments of the region trying to maximize returns across all sectors of the economy, not just diversify out of oil. We see it in the UAE, they're expanding oil production capacity, but also non-traditional for the region, so non-oil hydrocarbon assets, as well as venturing into renewables. I think the region sees energy as an advantage, a strong sector going forward, and rather than downplay and shrink oil, it's going to pivot to different parts of the oil sector, and it will remain an important pillar of the economy.
Yeah, and of course, petchems, and the refining side, sticking to oil, but getting more specialized on that front.
Absolutely.
Dr. Charles, just let's get your latest on the EastMed gas, not just from the political point of view of what's happening obviously with Israel, but also just in general, this time last year, before we had the current crisis in the Middle East, you were not very positive about East Med gas prospects, whether it's Cyprus or other. Give us your latest on that, and what you see might be expected in the year ahead on any new sort of activity there.
Well, I'm even less positive now. The region is Egypt. Egypt's economy is tankering. It has massive problems. As a result, Egypt owes the oil companies, oil and gas companies, something like $6 billion. And these companies have ceased developing new projects to increase production. The bad news also are from Zohr, where the famous Zohr is no longer the Zohr we thought it was. It doesn't have 30 TCF of gas. Recoverable gas is probably 10 to 11 TCF, and half of it has already been produced. Egypt production is declining continuously. Over the last 3 years, it has gone down by 30% and it's still going down. Egypt is desperate for gas. So Israel is taking advantage of that. Israel has already approved increased production in Tamar and in Leviathan, and plans to increase exports to Egypt from about 8 to 9 BCM now to about over 20 BCM by 2028. That politically compromises Egypt. Egypt is highly dependent on that. And there is little it can do to confront Israel in terms of the Gaza war. So Egypt, as you probably noticed, is remaining in the background, or not in the background, but not as active in the war. Egypt's situation is dire. At the moment, because of this reduced production, it has been forced to import gas. We thought that import of LNG was going to be temporary over the summer, but it now has extended imports into winter. That has become very, very worrying because it is draining its economy. They have to pay for this LNG in foreign currency that they don't have, but they have to pay. It's either that or power cuts will increase and continue. All of that is determining what is happening there. In Cyprus, Chevron has come with a plan to develop Aphrodite. The government is mulling over it. We'll see what happens over the next few weeks. The Egyptian energy minister came to Cyprus last week to plead for more gas. They want to see that Aphrodite gas going to Egypt. But the oil companies are delaying these things. Chevron is halting the production of the Nargis gas field in Egypt because it's not sure whether it will get paid. Eni came to Cyprus in April and promised to develop the gas fields in Block 6. They have been sitting on that. They haven't done anything, again, because they're not sure that if they produce the gas and take it to Egypt, they will get paid. So this is where the greatest problem is. So I'm sure that Egypt will receive help from the Gulf states and probably from Europe to sort of trundle along and not going to, but the production
the economic
of gas
situation is dire.
Yeah, the production of gas is a major problem.
Okay, Mehmet, I'd like to just go to you to wrap up. We haven't mentioned, I mean, we talked about geopolitics a bit at the beginning and acknowledged that it's not triggering any support for the oil price. Just want to go to you about Russia, just to get your point of view there on, obviously the war there goes on. We saw a few dynamics change in the summer with Ukraine, perhaps having the upper hand for a while, but we really are now settled into this stalemate, aren't we? And no one sees an end to the Russian-Ukraine conflict, correct? And how is that impacting, if you like, also Russia's economy in terms of how long it continue to fund this? Where is the forward-looking, if you like, sentiment on where that conflict is going to be in 6 months' time or in a year's time?
Well, it's anybody's guess, of course. But before getting into Russia-Ukraine war, I want to say a few words on ISMET, just to complement what Charles said. One is that, yes, Israel, because of Gaza, is in difficulty, although it's going to increase production in Tamar and Leviathan. Egypt is declining production. And ISMET's Gazprom is losing its relevance as well. We had a discussion recently. Without Turkey being in the forum, it's not going to be so meaningful. Either Turkey will be included at some point, or there is going to be a new grouping to be created, not only on natural gas, but ISAT energy community, including oil, nuclear, renewable, climate change, finance, efficiency, and other issues. So I just wanted to make that point. And regarding the Russia-Ukraine war, it seems clearly that there is no prospect for any settlement soon, although there was some hope that China might be stepping in, because China is not happy that there is a stalemate in the Russian-Ukraine war. This is putting Russia seriously preoccupied in that part of the world, not collaborating with China in other areas. And also it's putting China in a difficult position because of its supply to Russia internationally. And I don't see any prospect in the next 6 months that a peace settlement will be reached, because both sides are sticking to their point. And the West, especially the United States, is pushing very, very hard for Ukraine to continue the war. And because there is an interest that Russia will stay in that gray zone as long as it can, at any expense. That's going to be on the shoulders of Ukraine, of course. So I don't think that we expect any quick solution. We also have the US election coming up. It depends on what Trump will do if he is elected. I think that's the only prospect of hope for any resolution that he can engineer with Putin, perhaps.
Right. So whether Trump gets in and moves the dial that hasn't moved, obviously, for a while. Thank you, gentlemen. There's our survey result today, slightly blipping agree. Yes, we are in a new price range of 60 to 70 for the next few months. Thank you so much for joining us, everybody, today, and have a good week ahead.
Thank you.
All the best.
Thank you. All the best to all. Cheers.